Now, let us take a look at 10 positions, okay? We're talking about 10 positions that are doing an extremely good job at paying dividends and increasing those dividends, okay? And it's very, very important that we keep up with these type of positions, because when you see the market gyrating like it has in the last 2 weeks, people losing hundreds of thousands of dollars in their portfolios at a drop of a dime, you need to have portfolio stability, okay, to handle the market instability. And so, family members, we need to go ahead and look at how we can insert certain positions into our portfolios that will allow us to get P.A.I.D. Okay? So now, family members, please take copious notes as I go down and give you this list and write down the symbols, do the appropriate drill downs, okay, to determine which particular positions are most applicable for the goals and objectives of your portfolio. Okay? So now, let's go ahead and let's look at 10 dividend-paying companies that are really, really concerned about their stockholders, their shareholders, and they work tirelessly to get them profits. Now, as a dividend growth investor, your goal should be to generate a stream of income which grows above the rate of inflation. The rate of inflation is pegged at 3%. Now, key to this is selecting the right dividend-paying companies, beloved, and for the past decade. Okay? Annual organic dividend growth has easily outpaced the historical rates. We're talking about historical rates of inflation by a factor of 2 or more. In fact, the dividend increases by the average portfolio that is heavily laden with dividend-paying positions has always been higher than the annual raises, okay, that most people make or receive on their plantation, aka their jobs. Now, in order to get these dividend increases, you have to do your homework, okay? So, yours truly has done the homework so that you can pass the test. And I have a dividend portfolio that is like a tireless employee who works 24/7, 375, okay, 365, 7 days a week for yours truly to get P.A.I.D. Companies who shares all of their income with yours truly. The company's raises are much higher than what one could expect, working extremely hard on the plantation, aka a job. So, it's no wonder that I have fully embraced the power of dividend investing. Yours truly loves to get P.A.I.D. and receive regular raises. Now, most of the work in building a dividend machine, like I'm going to present to you, should be done up front. And when you do your homework, as my grandmother used to say, peace and blessings be upon her, you will pass the test. So, let's go ahead and review a list of dividend-paying companies that have increased their dividend, okay, on an ongoing basis. A list of companies that show stability no matter what the market is doing. Bull bear. These companies will allow you not to care. First company is Archer Daniels Midland, symbol ADM. Now, ADM is a processor and transporter of agricultural products and commodities. Now, the company's board of directors declared a cash dividend of 33.5 cents per share on the company's common stock, which was a 4.7% increase from last quarter's dividend of 32 cents per share. Family members and listeners alike, this marked the 43rd consecutive dividend increase. Okay? And this is what we like to see. You don't just get a dividend-paying company just to have it. That dividend-paying company must be increasing that dividend as well. Now, let's go ahead and continue to analyze Archer Daniel Midland, symbol ADM. Now, over the past decade, the company has been able to grow distributions at an annual rate of 10.80% per year. And the company is one that is rock solid. Now, with ADM sales at a low valuation of 15 times forward earnings, okay? And when we look at that, and we see that it yields an attractive 3.20%, this particular position is one that demands review for possible inclusion into your portfolio. Archard Daniel Midland, symbol ADM. Next position I want to give you is S&P Global, trades under the symbol SPGI. Now, SPGI generates independent financial ratings, benchmarks, analytics, and data to capital and commodity markets. It has three segments: ratings, market and commodities intelligence, and S&P Dow Jones indices. Now, S&P Global has approved a 22% increase in the regular quarterly cash dividend to 50 cents per share. And furthermore, the company has paid a dividend each year since 1937. I said the company has paid a dividend every year since 1937. And it has increased its dividend annually for at least the last 45 years. This company is one we need to monitor because the company released a statement and it said the following: we are raising our annual dividend increase in 2018 in a substantial way as a result of our additional free cash flow capabilities generated by the United States tax reform. Stepping up the dividend underscores our long-term commitment to returning capital to shareholders, end quote. This is a clever way to monetize His Royal Highness Donald Trump's tax reform. The company has generated impressive growth in earnings per share over the past decade. S&P Global grew earnings from $2.94 per share in 2007 to $5.78 per share in 2017. This stock is overvalued at 21 times forward earnings and yields a 1.10% yield. But S&P Global may be worth a second look at when and if it pulls back below 20 times earnings. Next position I want to give you is Church and Dwight, symbol CHD. Now, CHD develops, manufactures, and markets a number of consumer staples, including Arm & Hammer, Trojan condoms, and OxyClean. Now, the company's board of directors recently declared a 14% increase in the regular quarterly dividend from 19 cents per share to 21 cents per share, equivalent to an annual dividend of 87 cents per share. Now, this is the 22nd consecutive year in which this company has raised the dividend. Now, Church and Dwight has paid a regular consecutive quarterly dividend for 117 years. I repeat, Church and Dwight has paid a regular consecutive quarterly dividend for 117 years. And over the past 5 years, this dividend has been able to grow at an annual rate of 9.60% per year. You see, this company is one that is rock solid and flies under the radar. The company managed to grow earnings per share from 61 cents in 2007 to $1.94 in 2017. And currently, Church and Dwight is slightly overvalued at 21.60 times forward earnings and has a dividend yield of 1.8%. So, it may be worth a second look when this company stock falls down to around the $44 per share price point. Church and Dwight. Okay? Symbol CHD. Next position I want to give you is CMS Energy. Symbol CMS. Now, CMS Energy is a utility company based in Michigan. And the board of directors of CMS Energy increased the quarterly dividend on the company's common stock to 35.75 cents per share, up from 33.25 cents per share. Now, over the past 5 years, this dividend has been able to grow at an annual rate of 6.70% per year. The company has rewarded shareholders with a dividend increase for 12 years in a row. And this company is one that has continued to look at increasing its dividend whenever possible. Now, it is expected that this company will continue to execute what they call their triple bottom line strategy of people, planet, profit, which allows the company to strengthen their business while providing annual earnings growth and higher stock dividends that benefit their investors. The company has managed to grow earnings between 2008 and 2016 from $1.20 per share to $1.98 per share. The stock is right at the top of its valuation at 19.70 times forward earnings and a dividend yield of 3.4%. Now, because CMS is a utility, okay, we need to look at this position when it dips down to below 16 times earnings. Next position I want to give you, talking about rock solid positions to get us P.A.I.D, is a company called Avista Corp. Avista Corp, symbol AVA. Now, Avista Corp is an electric and natural gas utility company. An AVA board of directors has declared a quarterly dividend of 3 cents per share on the company's common stock, an increase of 4.20%. Over the past years, the dividend achiever has managed to increase its dividend at an annual rate of 4.30%, and that quarterly dividend is 37 cents per share. 37 cents per share, not 3. Now, the dividend increase approved by the board of directors marks the 16th consecutive year that the board has raised the dividend for their shareholders. The company almost tripled its earnings per share over the past decade from 72 cents in 2007 to $2.15 in 2016. The stock yields 3%, but is overvalued at 26 times forward earnings. The next company I want to give you is Polaris, symbol P.I.I. Polaris, symbol P.I.I. Now, Polaris Industries makes various on- and off-road sports vehicles. The company's board of directors approved a 3% increase in the regular quarterly cash dividend, raising the payout to 60 cents per share. The increase represents the 23rd consecutive year of Polaris increasing its dividend. And in the past 5 years, the company has been able to boost its payout at an annual rate of 9.40% per year. Polaris Industries grew its earnings per share from $1.53 per share in 2007 to $2.69 per share in 2017. Forward earnings are currently $6.11 per share, which translates into a forward PE of 18.30. Now, this company is one that we need to continue to monitor closely, and I'd like to do a little bit more research on, but it's a possible for consideration for inclusion into our portfolio. Once again, Polaris, symbol P.I.I. Next position I want to give you is Union Pacific, symbol UNP. Now, Union Pacific is a railroad company covering the western two-thirds of the United States. And the board of directors recently voted to increase the quarterly dividend on the company's common shares by 10% to 73 cents per share. Now, this was the second dividend increase over the past year. Now, this company has managed to reward shareholders with a raise for 12 years in a row with regards to its dividend payout. The company grew its earnings per share from $1.73 per share in 2007 to $5.79 per share in 2017. We should consider this position for possible inclusion to our portfolio when the stock price falls to $1.16 per share. The next position I want to give you is Prudential, symbol PUD, talking about Prudential Financial. Now, this company, as you know, sells insurance and manages various types of investments. The company declared a quarterly dividend of 90 cents per share, representing an increase of 20% over the prior year dividend level. And over the past decade, this dividend achiever has been able to grow distributions at an annual rate of 10.10% per year. This marked the 10th consecutive annual dividend increase for Prudential. The company grew its earnings per share from $7.61 per share in 2007 to $10.58 per share in 2017. It currently yields 3.40% and is extremely attractive at its current valuation at 10 times earnings. Prudential, symbol PRU. And this next position is one that's next to the last position I'm going to give you, is Hasbro, symbol HAS. Now, Hasbro is a massive toy and board game company. The board of directors increased the quarterly dividend by 11% or 6 cents per share to 63 cents per share. This marked the 15th consecutive annual dividend increase for this particular company. Hasbro has managed to hike dividends at an annual rate of 14% per share over the past decade. The company grew its earnings per share from $1.97 per share in 2007 to $5.64 in 2017. Now, currently, the stock is attractively valued at 17.30 times earnings and has a dividend yield of 2.6%. Now, you have to be careful about toy manufacturing companies like Hasbro and Mattel because their business models are highly cyclical. The toy product cycles tend to be short, and the competition is very, very intense in that arena. That being said, Hasbro could be a decent pick for a diversified dividend portfolio. And the last position that I want to give you, one that would give us P.A.I.D. consistently, is a company called BIMIS, symbol BMS. Now, BIMIS is a manufacturer of various food packaging products. The board of directors approved a 3.3% increase in the quarterly cash dividend, increasing it to 31 cents per share. Now, this marks the 35th consecutive year that the company has increased its dividend payout. The latest dividend increase is slightly lower than the 10-year average of 3.6% per year. According to the Chief Executive Officer, William Austin, the Chief Executive Officer of BIMIS, he said, and I quote, "Our dividend program is an important part of our shareholders' total return on investment in BIMIS Company. Our annual cash dividend has increased consecutively over 35 years, demonstrating confidence in our ability to generate strong cash flow and future growth," end quote. This stock grew its earnings per share from $1.74 per share in 2017 to $2.39 per share in 2017. The shares seem fairly valued at 18.20 times earnings. The dividend yield seems sustainable at 2.80% per year. Family members, BIMIS Company, symbol BMS. You've just received 10 companies that are capable to get you P.A.I.D. consistently. And family members, you do the appropriate drill down, each and every step of the appropriate drill down. And pick out the positions that are most applicable for the goals and objectives of your portfolio and govern yourself accordingly. You've been inside the Classroom Without Walls radio broadcast, and I want to thank each and every one of you for allowing me to be part of your day. I want to remind you that if you're a member of the ASK THE WIZ Wealth Institute family, we will be in our normally scheduled ASK THE WIZ Wealth Institute virtual trading room tomorrow from 9:30 until 11:30 a.m. Eastern.